What do you want your wealth to do for you? BNY Wealth helps ensure that every financial decision actively and intentionally powers their clients' goals. Subscribe to their podcast, Your Active Wealth, to discover advice and guidance for building and sustaining wealth in any market.
Being a small business owner isn't just a career, it's a calling. Chase for Business knows how much heart and effort go into building something of your own. Manage all your business finances, from banking to payments to credit cards, all in one place with Chase's digital tools. Plus, access online resources designed to help your business thrive. Learn more at chase.com/business. Chase for Business. Make more of what's yours. The Chase mobile app is available for select mobile devices. Message and data rates may apply. J.P. Morgan Chase Bank, N.A. Member FDIC. Copyright 2026. J.P. Morgan Chase & Company.
Support for the show comes from Public. On Public, you can build a multi-asset portfolio of stocks, bonds, options, crypto, and now generated assets, which allow you to turn any idea into an investable index with AI. It all starts with your prompt. From renewable energy companies with high free cash flow to semiconductor suppliers growing revenue over 20% year over year, you can literally type any prompt and put the AI to work. It screens thousands of stocks, builds a one-of-a-kind index, and lets you backtest it against the S&P 500. Then you can invest in a few clicks. Generated assets are completely customizable and based on your thesis, not someone else's. Go to public.com/market and earn an uncapped 1% bonus when you transfer your portfolio. That's public.com/market.
Paid for by Public Investing. Brokerage services by Open to the Public Investing, Inc. Member FINRA and SIPC. Advisory services by Public Advisors, LLC. SEC Registered Advisor. Generated Assets is an interactive analysis tool. Output is for informational purposes only and is not an investment recommendation or advice. Complete disclosures available at public.com/disclosures.
Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. Straight ahead on the program, we'll look to earnings from streaming and chip giants Netflix and Intel. I'm Nathan Hager in Washington.
I'm Caroline Hepker here in London, where we're looking at the annual gathering of the powerful, the rich and the famous in Davos, Switzerland.
I'm Doug Krisner, looking at how Beijing will report the performance of the Chinese economy.
That's all straight ahead on Bloomberg Daybreak Weekend. On Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 92.9 Boston, DAB Digital Radio London, Sirius XM 121, and around the world on BloombergRadio.com and the Bloomberg Business app.
Good day to you. I'm Nathan Hager. Investors will be watching earnings from Intel and Netflix this week for signals on two very different corners of the tech landscape. We'll hear from Netflix first on Tuesday. And for more on what to expect from the streaming giant, I'm joined now by Bloomberg Intelligence senior media analyst Geetha Ranganathan. And Geetha, I feel like there's been so much talk about Netflix's bidding war for Warner Brothers Discovery that it's been kind of easy to lose sight of the fundamentals. So this will be kind of refreshing. What are you expecting?
Yeah, I'm really hoping we get a respite from this three-ring circus, Nathan. I mean, it's been going on for quite a while now. I hope the focus really turns, and this is a distraction, from this whole drama that we've seen. But fundamentals-wise, you're absolutely right. The company has never been in a stronger situation. We think they will absolutely deliver on their revenue growth expectations of about 17%. Strong operating margin, strong free cash flow. They're expecting about $9 billion for the full year. And really, I mean, many, many times, Nathan, the company has said that, 2025, as well as the fourth quarter, the slate really is absolutely a blockbuster slate. I mean, you think about it, Stranger Things, the finale, you had so many other titles. I mean, whether you're thinking about Knives Out or Emily in Paris or, My Secret Santa or Frankenstein, Nobody Wants This. I mean, the list just goes on and on. Yeah. But I think more importantly, Nathan, I mean, it was really their sports strategy. So if you looked at the Lions-Vikings game on Christmas Day, that was the most streamed NFL game in US history. So really a huge achievement, and kind of really speaks to what Netflix has been able to achieve. So I think there's obviously going to be a lot of attention on all of those metrics, how that kind of plays out into advertising, which is a big focus for them. But I think still, this overhang from the Warner drama is not going away anytime soon.
And full disclosure, I too watched Stranger Things 5 and the Knives Out sequel. But when you think about that content slate, and what I would have to think is a strategy for even more content to come into this year, doesn't it raise the question about what the strategy is for Netflix to buy Warner Brothers Discovery? Does it need that Warner Brothers IP?
So that has really been the head scratcher, right? People really kind of wondering, is Netflix just playing the long game here? Do they just want to beef up their content portfolio, make more of a defensive play for Warner, keep it out of everybody else's hands? Or are they really seeing some kind of slowdown in their own core engagement? And I mean, this is what has kind of fueled so much of concern here, because people really wondering why they're going after the Warner portfolio. Is it because we're seeing some kind of a slowdown in engagement metrics? I don't necessarily think that will be the case, but regardless of how this whole drama plays out, we know that fundamentals will continue to be very strong. They have their own original titles, even without Warner, have really performed very, very well. We've seen over the past so many years. But I do think that Netflix is prepping for the future, Nathan. As we kind of look at AI and how AI can democratize content, I think it really becomes key for many of these big streamers to have access to more top-tier franchises and properties. And really, Warner brings them a huge treasure trove of titles that they can mine very nicely into the future.
Well, talk a little bit more about what's driving your view that Netflix still has that engagement and compared to some of its competitors as well. What are some of the metrics you're looking at now that they don't break out, subscriber counts anymore?
Yeah, absolutely. So, they do disclose periodically, a report called What We Watched, and they release this every 6 months. And we do get some insight into really what are the biggest titles on Netflix, how many minutes are spent watching those titles. And on average, you'll see that a Netflix member spends about 2 to 2.5 hours per day engaging with their content. Which is really a staggering number. And then if you just kind of put that in the context of all of the streaming players, they're way ahead of most of their rivals, but they constantly bring up this comparison with YouTube, whom they actually trail. And so their whole argument has been, we really need to catch up to YouTube. And that threat only gets bigger, I think, with the advent of AI and people like wanting to create more content, more user-generated content with all of these AI tools like Sora. And so while Netflix really is in a strong and, an enviable position, they always kind of have to watch over their shoulder, I would say.
So given that position, should subscribers be on the lookout for things like higher rates? We keep seeing those creep up here and there as well.
Yes, they definitely have pricing power. We've kind of seen a steady cadence of price increases every 12 to 18 months. So I absolutely think that a price increase is, on the books sometime in 2026. And that's just kind of become the name of the game here in streaming. We've seen all of these streaming services. I mean, whether it's Netflix, Disney Plus, HBO Max, all of them, really kind of using that pricing lever as the subscriber number is not important anymore, and it's really more ARPU and pricing power and revenue growth. So all of the streamers are kind of flexing their muscle when it comes to pricing.
All right. Well, we're going to be focused on the fundamentals in just the next few days when Netflix opens those fourth quarter books. Thank you for this, Geeta. Great having you on with us. That's Geeta Ranganathan, Senior U.S. Media Analyst for Bloomberg Intelligence. Now, let's turn to Intel. The biggest maker of personal computer processors opens its fourth quarter books on Thursday. Is the turnaround intact? Let's bring in Bloomberg technology reporter Ian King for insights on that. Ian, we know the U.S. government is working on building a 10% stake in Intel, so it's sure to be watching these earnings. What should we expect from the chip maker?
Yeah, I mean, this company has very much had a transitional point. Last year, you mentioned, obviously, the government investment. There was also an investment by NVIDIA and also an investment by SoftBank. And what those did was really shore up the balance sheet. So on that side of the house kind of task, completed. Things are better than they were. There's no kind of existential risk, at least in people's minds for the time being. But what we're really looking at now is the operational side. You're a chip company, you have to sell more chips, that cost more money and get more profit.
Well, to that point, where do things stand for Intel right now, getting that operational side in a turnaround in the short term?
Yeah, I mean, we're in the very early stages of that. At the beginning of this year, Intel was at the CES conference in Las Vegas, and they unveiled a new range of chips based on a new production technology. And what they said was, look, this gets us back in the game. This makes us competitive again. And this is very much the proof point that our technology is relevant in this industry again. Obviously, we're only a couple of weeks away from that. So, too early to see whether they're selling like hotcakes or whether, that's hype from the company. But obviously, the company's forecast this quarter will be really important as a guide to their confidence in that.
Talk a little bit more about what the CEO had to say about those new chips and how they stack up to some of the competition around, names that we're familiar with, like NVIDIA, like AMD.
Yeah, I mean, we're talking about PC processors at this point. So that's a high volume market for Intel. So that's important in terms of cash flows. That's important in terms of filling those factories. But it's not the sort of den of profitability, the core profitability. That'll come later when we see what it's doing in server chips. What the company has said is, look, hey, this new range really kind of repairs the issues of the last couple of ranges of chips that we've had out there. It's the most power efficient and they're good at performance as well. So that really helps position us well against our competitors. And, they're talking about their confidence again. And that's really been the first time in a long time that we've seen Intel really kind of beat their fist against their chest and say, hey, look at our chips.
Do those chips, the cost of putting them together, does that pose a potential risk for Intel going forward?
Well, the risk is how many they can sell. They've already built, a brand new factory, Fab 52 in Arizona. They're trying to convert some of their other production lines over to this new production technique. That shift and that cost makes sense if you sell a lot of these things. If you don't, then that's where the problem is.
There's got to be a lot of focus as well, like you mentioned, about the foundry plans for Intel, given the U.S. government's focus on boosting that business with its stake. What kind of color could we expect around, Intel's factory plans, boosting manufacturing in the United States?
If you own Intel stock, and as taxpayers in the US, we do, all you care about is Intel going out on stage somewhere or in some forum and saying, hey, this is a big customer we have other than ourselves. NVIDIA is going to use our plants. AMD is going to use our plants. That has not happened yet. And, the prospects for that at the moment are kind of murky. We don't know. It's difficult for Intel to sort of do that because you don't want to be talking about what your customers are up to. But frankly, the 18A node, the one that these new chips are built on, that node has not delivered on the promises of external customers that we got from previous management. And it might be that the next node, this so-called 14A, which is going to come in the next couple of years, that might be the one where we start to see external customers. So probably a longer-term story there.
Are you seeing, just reading the tea leaves, much interest, at least in the short term, from potential customers for Intel in some of these chips and the foundry business?
If you're one of those companies I just mentioned, you're going to look at Intel. Of course you are. We're in a world where we're short of capacity, where TSMC is basically filling all of the orders it possibly can and is likely getting more than it can fill. So of course you're going to look at Intel, but you're also going to look at Samsung. Samsung is arguably a more established kind of second source to TSMC in the so-called foundry world. So yeah, everybody's going to look, but Intel has to prove that this technology it has is A, good enough to compete with TSMC, and B, offers an advantage because it costs money to switch over as well.
Appreciate this, Ian. Thanks for coming on with us ahead of Intel's earnings. That's Ian King, technology reporter for Bloomberg News. And coming up on Bloomberg Daybreak Weekend, we'll look ahead to the annual gathering of the rich, famous, and powerful in Davos. I'm Nathan Hager, and this is Bloomberg.
How does BNY Wealth help accomplished individuals, families, and business owners achieve their financial goals? They start every conversation with the question, what do you want your wealth to do for you? For over 240 years, BNY Wealth has partnered alongside their clients, putting their expertise and proprietary solutions to work for them. Institutional investors embrace principles that help build wealth consistently over time. BNY Wealth's multidisciplinary active wealth approach employs these time-tested principles to help ensure that every financial decision actively and intentionally powers their clients' goals, while uncovering opportunities that may have been missed otherwise. The result? Highly satisfied clients and enduring relationships that span generations. To learn more about how BNY Wealth can help power your wealth goals, subscribe to their podcast, Your Active Wealth, where they offer guidance for building and sustaining wealth in any market. Again, that's Your Active Wealth.
Support for the show comes from Public. On Public, you can build a multi-asset portfolio of stocks, bonds, options, crypto, and now generated assets, which allow you to turn any idea into an investable index with AI. It all starts with your prompt. From renewable energy companies with high free cash flow to semiconductor suppliers growing revenue over 20% year over year, you can literally type any prompt and put the AI to work. It screens thousands of stocks, builds a one-of-a-kind index, and lets you backtest it against the S&P 500. Then you can invest in a few clicks. Generated assets are completely customizable and based on your thesis, not someone else's. Go to public.com/market and earn an uncapped 1% bonus when you transfer your portfolio. That's public.com/market.
Paid for by Public Investing. Brokerage services by Open to the Public Investing, Inc. Member FINRA and SIPC. Advisory services by Public Advisors, LLC. SEC Registered Advisor. Generated Assets is an interactive analysis tool. Output is for informational purposes only and is not an investment recommendation or advice. Complete disclosures available at public.com/disclosures.
These days, it seems like AI agents are just about everywhere you turn, every field and every function. But without identity, you can't trust they'll serve your business instead of jeopardizing it. Fortunately, Okta helps you get identity right by securing your AI agents' identities, giving you a single layer of control, a single standard of trust. So whether an AI agent supports a single user or your entire enterprise, with Okta, you'll turn risk into opportunity. Secure every agent. Secure any agent. Okta secures AI.
This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Nathan Hager in Washington. Up later in the program, we'll turn to China and look at whether economic expansion there met the government's target. But first, the international business elite descend on Switzerland next week for the World Economic Forum in Davos. The annual gathering is traditionally about multilateral goals, promoting peace, prosperity, and social progress. But this year has begun with fundamental questions about international law, America's role in the global order, and if global business is on the same page on issues like diversity, climate change, and politics. For more, let's head to London and check in with Bloomberg Daybreak Europe anchor Caroline Hepker.
Nathan, the organisation that runs Davos has set its theme for this year as a spirit of dialogue. With world leaders, including US President Donald Trump, set to attend, we're quite curious to know what conversations they will be having. It's Trump's first in-person appearance at Davos in 6 years. Last year, in a virtual address, the US President criticised the Paris Climate Accord and promised to unlock the liquid gold of fossil fuels. As well as his geopolitical interventions in the Middle East, Venezuela and Greenland, Trump has also shown his administration is prompt to impose its demands on global businesses, from reshoring to pricing, executive pay and shareholder dividends across a wide array of sectors. What message will he, world leaders and the leading light of global business be bringing to this international forum? Joining me now is our editor-at-large, Francine Lacroix, who'll be leading Bloomberg's coverage at Davos, as every year, Francine, of course. What do you think are the big questions that you're going to be asking this year at Davos? Not asking you to reveal your trade secrets, but give us an insight.
I mean, there's this idea, Caroline, that 2025 was really the year where President Trump shaped his agenda about how he sees the world, economic ties, trade. And I think we're trying to find out whether 2026 is maybe the year where countries or companies push back. Now, we definitely started, the first couple of weeks of this year with a terrific news flow, much news flow that we weren't expecting. And look, it's going to be, part of the Donald Trump show. He shows up in Davos. It's the third time that he arrives. We believe that he'll be there towards the middle of the week. In his first appearance in 2018, I remember it like it was yesterday, he delivered a surprisingly open-armed message declaring that America first does not mean America alone. Then he was pretty defiant in 2020 as his impeachment trial was getting underway in Washington. And then last year, this was like 2 days after he got inaugurated, shortly after being reelected, he delivered a speech at the annual meeting via video, and there he focused on oil prices, interest rates, and European regulations. So a lot of the questions will really be trying to figure out how to deal with the president of the U.S., how to deal with the administration, if there's tariffs and trade. And then there's more like the softball questions, about the spirit of dialogue, how can we invest in people. Some of the conferences were probably, or some of the panels were probably distilled just to make sure that they would appeal to the Trump administration. But you have great speakers. You have Jamie Dimon, you have all of Wall Street showing up. But it's a little bit of a mix and match. I mean, you want to know what President Trump does and what AI becomes in terms of valuation and impact on the economy.
Interesting. So then, who are you hoping most to speak to hear from? Because it really is. It's everyone. It's those global world leaders, business leaders who are all going to be there.
So I think this year is a little bit different again, because it'll be really interesting to hear a reaction, right, to see if there's anyone that speaks up against some of the things that the Trump administration are putting in place. We'll have good conversations on inflation, and I keep on getting reminded that why inflation hasn't really taken off is because when President Trump on Liberation Day last year put these tariffs, the rest of the world stayed quiet. This year could be different. I don't know whether Davos is the right time. We also really want to know what is and will be in President Trump's speech. Does he go after Europe? We know that he's been talking about financials and the fact that, for example, he wants to go after some of the private equity because domestically he has this huge concern about affordability. So does that spill over into the messaging for the rest of the world? I mean, I can remember, Caroline, maybe 2-3 big policy speeches this year when, it wasn't even the president, it was the vice presidents and people around him came to Europe. And frankly, it was shocking, right? We had J.D. Vance and the people in the room were wondering whether it was still an ally or not, whether the U.S. was. And so I'm looking for tone. And then on the back of that, what some of the big titans think that means for their business and world economy.
WEF, which is the organisation obviously behind Davos, in their mission statement, had to thumb through the book to find it, improving the state of the world. That is part of their mission statement, the emphasis being on dialogue, on collaboration, on cooperation. And as you very much alluded to, President Trump being there, in many ways, the kind of aggressive expansionist America First policies are really a kind of indirect conflict with that aim. So it could get uncomfortable.
It probably will get uncomfortable at times unless everybody plays ball and, tries to say that they get along. I mean, the WEF mission statement is always a little bit complicated because they try and invite big head of state that can be controversial. There was a Chinese president a couple of years ago. We've had other presidents that were that they had to make sure that they felt welcome while at the same time not being seen as a pushover. But I think what the World Economic Forum is a great platform, right, for, again, companies or heads of state to try and push their message. So we're expecting, for example, the UK Prime Minister with the Chancellor to try and push the UK in saying, look, this is what we're planning to do on growth, maybe to put the direction in a better footing for the UK after some of the mishaps that we saw in the budget and non-DOMs. So it is a platform where you speak to worldwide investors, where it gets picked up, but a lot of the business goes outside of the World Economics Forum remit, right? It's not in the Congress Center. So I guess what we'll see in the Congress Center, apart from these big policy speeches, may be a little bit softer. And then we're also expecting deals outside. It's quite a circus.
Yes.
With a lot of snow this year.
And, of course, with Bloomberg Davos House, with lots of speakers who actually come and talk to you and all of our other reporters there. Stock markets also are at a high. So, I mean, it comes at a very interesting moment. Our European stocks have done incredibly well. Lots of focus on defence stocks as well. Geopolitical risks are very high. Stock markets are very high. So it's kind of quite an interesting moment, isn't it?
Yeah, I'm excited about Bloomberg House because we have a lot of the AI tech giants. And so if you look at AI, I think there are three main questions which we'll try to address. Is first, if you look at AGI, artificial general intelligence, how far away are we from it? How do you actually define it? Because it changes depending on who you are. There's, of course, the question about valuations. So if you're a Google or an OpenAI, we'll speak to actually Dario Amodeo of OpenAI. I mean, the valuations of these companies at the IPO are they're just massive. And so there's a real question on, this is all on expectations, but when do they actually start making money? When do they start showing in revenue? And then the other question, which I think really filters through the economy, which we haven't spent that much time on, is we're hearing the labor markets are fine, but I hear more and more chief executives saying, look, I'm going to hire a little bit less because I have to spend on AI, and AI gives me the promise of productivity. So actually trying to understand what this means, in 6 months, 10 months, but even then 2-3 years for our economies and job displacements is something that we'd like to put the focus on.
Yeah, interesting, isn't it? Is that big debate about globalization? Is this a change, the end of globalization? Do trade flows continue versus, as you say, that maybe domestic productivity push and gain from AI? I mean, in the past, again, you slightly alluded to it, but climate change and green finance have featured very heavily at Davos. Do you think that still holds?
I can't see anything green on their green financing. There's a little bit on renewable energy, which is under the umbrella of the energy complex. I think there are still quite a lot of panels outside the World Economic Forum. Now, there are, of course, rumors that this is because the Trump administration said, look, we don't want anything really woke on the agenda if we show up. Again, if you look at an energy panel, it's difficult to do an energy panel without touching on renewables and green and how you finance that. But it's really not as prominent as it used to be. I think a lot of those conversations will still be happening, but maybe outside. Again, there are a lot of houses. There's also USA House. There's a lot of houses just outside the Congress Center, which people are taking over. And that comes up more outside the Congress Center than inside, where it's managed by the World Economic Forum.
Fran, I'm not going to ask you how many years you've covered Davos. I know it's a long time and that it's very important because it anchors a lot of our thinking, doesn't it? Because it comes right at the start of the year. But I do want to ask you what I think listeners will be interested in, which is how do you have the stamina to go from conversation to conversation to conversation with all of these people on very different topics? How do you think and plan about your engagement when you're there? What do you think about getting out of Davos as an event, as a journalist?
First of all, the networking is actually tiring, but I think you have to enjoy it. Otherwise, you don't show up at a nightcap at 11 p.m., especially if you're on air at 5 a.m., but it's worth it. There are a lot of people that are going to Davos for the first time. And so some of them have reached out, and I always said, look, just prepare to leave early in the morning. So for us, it's 5 a.m., but it could be 6 or 7 if you're a chief executive, and just plan your day like you're not going back to the hotel. So I actually have a little bag. And I have various layers if I'm outside for 3 hours, or a different pair of shoes if I'm moderating. And it's so, prepare logistically and then just read so you're prepared for anything and listen out, because sometimes there'll be big people that we're not expecting that show up.
Okay, Fran, we'll watch you with the wheelie bag around Davos, preparing for those big conversations. Thank you for talking to us about it. We really appreciate it. Well, you've been hearing from Bloomberg's Francine Lacqua, of course, ahead of the World Economic Forum's annual meeting in Davos. We will have full coverage as that takes place from the 19th to the 26th of January. I'm Caroline Hepker here in London. You can catch us every weekday morning for Bloomberg Daybreak Europe, beginning at 6 a.m. in London. That's 1 a.m. on Wall Street. Nathan.
Thanks, Caroline. And coming up on Bloomberg Daybreak Weekend, we'll look at how Beijing will report the performance of the Chinese economy. I'm Nathan Hager, and this is Bloomberg.
Support for the show comes from Public. On Public, you can build a multi-asset portfolio of stocks, bonds, options, crypto, and now generated assets, which allow you to turn any idea into an investable index with AI. It all starts with your prompt. From renewable energy companies with high free cash flow to semiconductor suppliers growing revenue over 20% year over year, you can literally type any prompt and put the AI to work. It screens thousands of stocks, builds a one-of-a-kind index, and lets you backtest it against the S&P 500. Then you can invest in a few clicks. Generated assets are completely customizable and based on your thesis, not someone else's. Go to public.com/market and earn an uncapped 1% bonus when you transfer your portfolio. That's public.com/market.
Paid for by Public Investing. Brokerage services by Open to the Public Investing, Inc. Member FINRA and SIPC. Advisory services by Public Advisors, LLC. SEC Registered Advisor. Generated Assets is an interactive analysis tool. Output is for informational purposes only and is not an investment recommendation or advice. Complete disclosures available at public.com/disclosures.
These days, it seems like AI agents are just about everywhere you turn, every field and every function. But without identity, you can't trust they'll serve your business instead of jeopardizing it. Fortunately, Okta helps you get identity right by securing your AI agents' identities, giving you a single layer of control, a single standard of trust. So whether an AI agent supports a single user or your entire enterprise, with Okta, you'll turn risk into opportunity. Secure every agent. Secure any agent. Okta secures AI.
This podcast is brought to you by Wise, the app for international people using money around the globe. When it comes to sending money abroad, many providers claim to offer free fees and competitive rates. But don't be fooled. This can be code for inflated exchange rates. With the Wise account, you can send, spend, and receive money in over 40 currencies without ever having to worry about hidden fees. Sending pounds across the pond? Most transfers arrive in 20 seconds or less. Spending reals in Rio? The Wise Travel Card gives you the mid-market rate on every purchase, no costly markups on your bill. Getting paid in dollars for your side gig? Avoid hidden fees and get the real exchange rate every time. With 24/7 access to live support, your international transactions with Wise are quick, transparent, and safe. Plus, Wise runs over 7 million daily checks to catch and prevent fraud. 15 million people already trust Wise to manage their money internationally. Be smart. Get Wise. Download the Wise app today or visit wise.com. Terms and conditions apply.
This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Nathan Hager in Washington. Let's turn to the growth story in China and whether economic expansion met the government's target. Bloomberg's Doug Krisner is host of the Daybreak Asia podcast.
Nathan, in the coming week, we'll get readings on Chinese economic growth for both the fourth quarter and the full year. Now, we already know the government has set a growth target for 2025 of 5%. And there are few reasons to suspect this will not be met, especially when you look at the collapse of fixed asset investment over the second half of 2025. Now, the growth target will be a main focal point in March when top Chinese leaders gather for their annual parliamentary session and unveil the next 5-year plan and set a new growth target. They will likely emphasize the durability of China's export economy in the face of a tariff war with the United States. For a closer look, I'm joined by Bloomberg's Alan Wong. Alan is Bloomberg EcoGov editor for China. Alan joins from our studios in Hong Kong. Thank you so much for being here. I have to begin by asking for your take on what we will learn from these GDP figures in the coming week.
China set out to achieve around 5% growth target for 2025, and it's looking very likely that it's going to hit that. But that's the consensus anyway, and there's actually no surprises that even in the last quarter that China was well on track to hit that goal. So a lot of economists and investors, they have moved on to the next question and to look at what the Chinese economy is going to look like in the coming year, because a lot of the factors that helped China last year may not be around anymore and have changed in material ways. So one thing that I'll be looking at is what trade looks like for China in the coming year. And obviously, there's a lot of external factors affecting whether or not China's factories could sell abroad and how much they can do that.
Alan, I'm curious to get your take on how high-tech industries in China have been contributing to the overall growth story. And I'm thinking of electric vehicles in particular. It's hard to believe that it's been 2 decades now since policymakers in Beijing decided to overtake Western car makers by betting on EVs. And now it's clear that China is the undisputed world leader. There's also this story on artificial intelligence, and I'm thinking of last year's so-called DeepSeek moment. So when you consider EVs and AI, are these industries having a significant impact when it comes to growth?
I think the EV sector certainly contributed to China's economic growth materially. AI, I think we're not quite seeing that just yet, but just and also it's much harder to measure than the value of goods flowing out of China's border. So if we just take a moment and look at the EV exports and just one of the poster children of China's industrial might is that EV sales growth has been in the double digits for many, many months in a row. And that really helped China export to markets, especially outside the U.S., because in the U.S., Chinese imports of EVs face very high tariffs. That's basically prohibitive. But elsewhere, China has been doing much better. But it's quite interesting that if you compare the production of EVs with traditional gasoline vehicles, one thing that people might overlook is that actually China is still producing mostly conventional vehicles. And that is part of China's economic story, is that the bright spots outshine the decline in traditional industries. And I think in EV is one such example where the growth is not really offsetting the slump in the rest of the industry. And if you look at the broader economy, that might be happening at a broader scale as well.
Maybe we can talk just a bit about the big news from the last week. China's trade surplus set a record last year of $1.2 trillion. We've talked a lot about evidence that Chinese goods had been flooding markets around the world last year. So I'm wondering about the degree to which the Chinese export economy fits into the story on the trade surplus.
EV exports are just part of that picture. China's exports have been strong outside the U.S. We're talking about selling to the African continent, to Southeast Asia, to the EU, and it's a wide variety of products. And the growth has been stunning. And then one reason is that a lot of the shipments meant for the U.S. Have been routed through those third markets. Either it's by China exporting input materials to factories in those places where they're assembled and then shipped onward to the U.S., or through some trade rerouting that may or may not be above board that to meet the final demand in the U.S. But overall, the overarching story is that China managed to survive Trump's tariff assaults and came out with the biggest trade surplus ever, $1.2 trillion.
So when we talk about China, there is no escaping the story on deflation. Now, to be fair, the latest reading on consumer prices did show a pickup in December, but that was mainly due to higher food costs. The problem is with wholesale inflation. Producer prices in the month of December were down by 1.9%. That's an annualized rate, and this made for the 39th straight month of weakness in PPI. So the question becomes, will 2026 be the year when we're going to see some type of reflation in China? Do you think that's possible?
Economists do expect reflation this year, but then there's no consensus on just how how much prices will jump. And this is something that's on Chinese officials' mind because they want to fight what they call involution. They want to fight the endless price wars that are dragging prices down and really squeezing companies' profit margins. Even the EV sector, such a shining example of China's industrial success, is suffering from over-competition, and then the car makers, they're not really making that much profit from selling a lot more cars. So that has many implications for the economy. If companies aren't making enough profits, then that means that there's limited room for them to raise wages, which is very important for domestic consumption, right? This is the part of the story that we haven't talked about yet. When the export to the rest of the world have been so strong domestically, and perhaps because domestically consumption has been so weak that exporters have nowhere to turn to except outward. And that is creating all sorts of problems, right? Even if exports to the EU jumped, we're seeing pushback from EU officials to those what they call state-subsidized exports, and that's destroying competition locally, and they don't like it. That's why they also put up their trade barriers. And now the politics is coming in, and then there's a negotiation between all the different parties, and we're still waiting to see just what kind of deal they could reach to end this standoff.
So from what I understand, and you can confirm this or deny it if you'd like, the property market, the weakness that we have seen in the housing sector in China continues to cast a pall. Weak confidence is something that we talk a lot about, more so on the side of the consumer perhaps than the business community. Where does this leave the central bank when it comes to adjusting policy in the new year, do you think?
The reason that the central bank hasn't done more easing last year than many economists expected was partly due to just how well the economy fared under tariff pressure. They just saw no urgent need to release more easing and to support the economy. And the outlook for this year is somewhat similar. It's reactive, like based on how the economy is doing against the external pressures. If it's doing well, then once again, PBOC may have less reason to support the economy, to cut the amount of cash that banks must keep in reserve and release more money to the economy for lending. That is to say that I think most economists don't expect massive stimulus to come. And you mentioned the property market. It sounds like beating a dead horse now, but we haven't seen a bottom yet in the property market. And it's a matter of whether the government sees it as necessary to restore confidence in the property market in order to increase people's mood to consume. Like that is like the government has said that they want prices to stop falling. But so far, the measures that they have rolled out so far have been incremental and haven't had a major impact on getting prices up.
And higher equity prices really haven't solved that problem, it would appear at any rate. So Chinese President Xi, we know, has recently welcomed a host of leaders. Maybe we can say that they are looking to mend fences, and I'm thinking of South Korea's Lee Jae-myung, along with Canadian Prime Minister Mark Carney and Britain's Keir Starmer. How do you think Xi is orchestrating this? We talked a moment ago about the fact that China, maybe as a result of the tariff policy from the U.S., has been working for a while now to become less dependent on the United States. Is there success now in trying to negotiate greater access to markets outside of China other than the United States?
I think the fact that these leaders are visiting China over such a short period of time, and for many of those leaders, is their first visit in many years, shows that there's some modest success on China's part in trying to get the West to re-engage with it. But there are lots of nuances here, because while those countries want to re-engage China and manage their ties with China economically, in terms of national security, they're still very much part of the Western Bloc. They're still very much in bed with the U.S. It's very hard to imagine a world where, because of economic interest, these countries would choose China over the U.S. So what we're seeing is mostly these countries trying to manage their ties with China, try to get as good an economic deal with China as possible. And also because of worries that China's exports are hurting their local competition. So there's a lot of incentive for them to talk to China to begin with. And also the elephant in the room is that China showed that it has massive leverage over rare earths, materials that a lot of countries rely on to make stuff in the high-tech sector. So if China successfully used rare earths to get concessions from the Trump administration during the trade negotiation, and they have used the same dominance as a form of punishment on Japan. So it's also in those countries trying to engage with China's interest to make sure that they can manage to maintain that access to the rare earths.
Alan, we'll leave it there. Thank you so very much. Bloomberg's Alan Wang. Alan is Bloomberg's EcoGov editor for China, joining today from our studios in Hong Kong. And I'm Doug Krisner. You can catch us weekdays for the Daybreak Asia podcast. It's available wherever you get your podcast. Nathan?
Thanks, Doug. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Tuesday morning at 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm Nathan Hager. Stay with us. Top stories and global business headlines are coming up right now.
These days, it seems like AI agents are just about everywhere you turn, every field and every function. But without identity, you can't trust they'll serve your business instead of jeopardizing it. Fortunately, Okta helps you get identity right by securing your AI agents' identities, giving you a single layer of control, a single standard of trust. So whether an AI agent supports a single user or your entire enterprise, with Okta, you'll turn risk into opportunity. Secure every agent. Secure any agent. Okta secures AI.
So, have you heard the story about the prescription plan with savings automatically built in? It's where a family of any size can feel confident the cost of their medication won't hold them back. Go to cmk.co/stories to learn how CVS Caremark helps members save just by being members. That's cmk.co/stories.
With Bali from iShares, you get access to both monthly income and growth potential in one simple ETF. It's the best of both worlds. Discover Bali, iShares Large Cap Premium Income Active ETF. iShares, the market is yours. Visit www.ishares.com to view a prospectus for investment objectives, risks, fees, expenses, and other information that you should read and consider carefully before investing. Risks include principal loss and the use of derivatives, which could increase risks and volatility. Monthly income is not guaranteed. Prepared by BlackRock Investments, LLC.